What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, I want to break down Solidex and Solidly. I want to explain to you guys the synergies that they have with all these different protocols and how they're going to shape up on the Fantom ecosystem. So this is a really cool thread by Kamaz Hamburger. I don't know. It's kind of cool. But anyways, it seems like he talks a lot about the VE protocols. I mean, he has VE 9 to 5. But anyways, let's go and get into this thread. So he is titling this "Mastering the Solidly War: A DeFi Course in Advanced Game Theory," and it's so true, man. Once you guys see this, the game theory behind this was just mind blowing. It's crazy. But basically, he's just going to talk about Solidly in general and show you guys what's up. So here's a couple of key takeaways he gives before getting into this. Anti-dilution for VE33 staking means early solid tokens are worth exponentially more than later tokens. Because when you first initially stake these tokens, these will actually give you the share of the protocol up front. And how do they do this? Well, when you stake, you're actually earning more solid, and it's compounding. So it's kind of cool to understand. It's almost like getting in Ohm, but early, or like Wonderland, but early. Everyone rebases at the same rate. Whereas there were some different things in Ohm and Wonderland that allowed people to actually game the system, like with the bonds and whatnot, and actually catch up. But basically, with the anti-dilution for VE33, you're actually compounding your rewards when you're staking your solid. So that's how you can understand it. Here are a couple of other metrics you guys need to keep in mind before we break into this thread. First, solid tokens are highly illiquid. So buy, a sell, they cause the price to be extremely volatile. And you'll see it's pretty crazy. What you guys also need to understand is when you look at these APRs for all of these farms, it's denominated in the farming token. Whereas in this case, it would be the solid token. So being that it is really illiquid and small buys and sells can cause price increases or dumps, most of the protocols are actually going to be buying the solid token. And when this happens, this creates buy pressure, which increases the APRs, which increases more people getting into the protocol, which will then increase the TVL. More protocols want to buy more because they can direct more liquidity, and then the APRs go up, and more people want to get in to get those APRs, and then the protocols buy more solid again because the liquidity is even higher. So it's kind of like that flywheel that you're looking for. So initially, the farming APRs will be underestimated for a few weeks, and some people are looking at like 3,000%, 4,000%, or 200, or not 200, but 1,000%. And they're like, that's doo-doo. I don't want to touch it. It's just another one of those DGM farms. And yeah, there's always the chance it could be like that. I mean, this is a big experiment for game theory, but it's pretty interesting to see how it's going to play out. Also, another thing to keep in mind, traditional pool 2 farming mechanics will not directly apply to farming solid. What is traditional pool 2? Well, I pair this one asset with this one asset 50-50, and one of those assets that I pair would typically be the farming coin, the coin that is constantly dumped. The reason why it's a little bit different in this one, not saying it is different, it's mainly just because of the game theory. If someone's able to break the game theory, then yeah, then it's not going to be any different at all. But right now with this game theory, the farming token is being used to collect solid. So in order to keep getting more solid, as in like if I'm Beethoven Finance or if I'm Taro, I need to keep buying the solid token. So it's like Curve. I farm solid, I get this solid, and now I redeposit back into solid and lock it up. So I can then vote and say, hey, I want these emissions so I can get more solid. And then it again, after I farm that solid, the new solid, I then say, okay, I want more emissions. So I come back over, I deposit it to get more solid. It's it's almost like, well, I mean, Curve is for the protocols. It's basically just being like a curve, but it has a little bit different mechanics with the Ohm style model where it has the compounding and you always keep the same share the earlier you stake. So it's kind of cool. It's a little bit complex. I really didn't. I kind of looked at it at first and I'm like, I don't see it. But then I realized, oh, Solidex, Solidly, those are actually two of the same things. And the emissions from one of them is actually going to be used for the swapping on the other. So once you have that mechanic and once you're able to create your own pools and have the protocols have their own pools, then you realize where the buy pressure is coming from. Because if that protocol wants more liquidity into their pools, which gives better price action on their token, as in like better prices, they're going to need the solid token. So that is where the buy pressure is coming into place. Going back to the thread, this is explaining, as a result, there will be an upward ratchet effect on the price of efficient farming tokens. And this is really true about Scream, 100, Terra, and Iron Bank being very efficient farming tokens. The reason being is because the market cap to the percentage of the VE token that they hold. Scream, Terra, I keep calling it Terra, it's actually Taro, and 100, those have really, really good ratios because their TVL over there was really high. So they actually got more of the VE NFT, so they have more of the initial vote. So those APRs are really high right now. And the reason why they're very efficient is because the market cap of the token is really, really low. So you can actually buy some of this token and farm with it and have a greater effect than farming with something with a larger market cap, like a Spooky Swap, which has a $200 million, $300 million market cap, whereas Scream is like 8 or 9 million, or probably even less than that. But still, that's how you can understand it. So this is going to create a lot of positive buy pressure on these small farming tokens because they're very efficient. So this really sums up Solid right here. Solid is basically Uniswap, Curve, and Convex with next generation contracts with revolutionary VE33 tokenomics. Yeah, it actually is like the cat's meow. I kind of like underestimated it up front, but now that I'm digging into it, and this great thread by Kamikaze, whatever you want to call him, this is an awesome thread. Make sure you guys give him a like and follow, and take a look into this thread. I'll leave a link in the description below so you guys can check it out. So now that we understand like the type of mechanics and the type of protocol that Solidly is, how is Solid different from a normal farm, as in non-dilution? Well, the holders of Solid can lock their tokens and receive the VE NFT in return. So if a normal user wanted to get some of the VE NFT as well, you can do this by locking the Solid token. The non-dilution makes Solid the anti-farm and dump token. The reason why it's non-farm and dump is because you lock it up to get more of the rewards by being able to vote with the VE NFT. So that's the flywheel that you're looking for. So VE lockers vote for pools to receive emissions, like I mentioned to you, receive trading fees from pools they vote for, and enjoy non-dilution. And there's one also not mentioned here. There's going to be bribes. We've already saw Tomb Finance. They started giving a $1 million bribe just for votes, which is crazy. But still, that's how you can understand it. This is also important to understand for the non-dilution. Non-dilution for VE lockers creates an extremely strong incentive to lock. Why is this? Well, because if there's non-dilution, the earlier you lock, the more you get, as in like you always keep the same share. That is what people are looking for. It's not upfront like, hey, I just want this, this, and this. No, it's I want as much Solid as I possibly can, because the quicker I lock it, the more I get at that point in time. Because if I'm going to wait longer, well, it's going to be like Ohm. As I try to get in and I'm trying to start earning some, there's some people earlier than me that already started earning some. So their percentage, as long as they keep farming, is always going to be higher than mine. So if they're able to have control of a multi-billion-dollar protocol, as in like multi-billion dollars in TVL locked up, that is going to be massive if you can just direct 25 or 30% of that. That's huge. That's a lot of money. You can basically just say, go here, or like direct liquidity back to me so I can get the emissions, etc. So with this locking though, this also creates more of a supply crunch on there, because you have tokens locked and other protocols participating in this lock. With this even means like just a small amount of buying will actually jack up the price. So say the yields start getting low. If a buyer is like, oh wait, it's really, really cheap. I can get a lot of liquidity for super cheap. So I'm going to buy a bunch of solid. So they buy a bunch of solid. It juices the price again. The APRs go up. More liquidity is added. And you guys get the flywheel cycle. When liquidity is added, more people want solid tokens. When more people want solid tokens, they buy the token. And when the token's bought, the APRs go up again. And it repeats the process. This is the flywheel. And here's the part about the pool 2 farming mechanics. The farming coin, aka the protocol token, is not being paired with another random other token. Yes, they do have Solid and the Solidex pools, or Solidex, whatever you want to call it. They do have those pools, but they don't have like a solid Fantom pool. Now, what's interesting is they don't have the pool 2. So like I was mentioning earlier in the video, not having the pool 2 is positive. And here's the reason for it. Without having the solid token as a pool 2, this creates positive buy pressure on these other protocol tokens like Scream, 100, Taro, etc. And these guys are constantly buying the other token, which is the solid token. So you have people buying the Scream, 100, and Taro because they think solid is a higher price, so they think they can get a more exposure to the solid token by buying these other governance tokens and farming with them. So that jacks up their price. And then these governance tokens are constantly accumulating the solid token, or in order to get more emissions. So they're jacking up the solid price, which will then take, oh, solid price be up. So users are like, oh, I don't want to buy solid. So I buy Scream, 100, or Taro. And when I buy Scream, 100, or Taro, that jacks up their prices. And then Scream, 100, and Taro, or any of the other protocols, are like, hey, let's go and get some more solid. So they buy more solid, and that repeats the flywheel. Again, I think you guys are starting to see these flywheel effects. This is what you want to look for. Now, here's an interesting thread with the different tokens broken down by their market cap rates. So as you guys can see here, these protocols have been allocated the following solid emissions. You can see Iron Bank, 13.63%. Scream, 13.55%. This creates a ton of buy pressure on Scream. Same thing with Taro. The ratios, like 9% to a $15 million market cap, is huge. Whereas something like Spooky Swap, right here, it has 26.66%, but it's a $200 million market cap. So if we do Spirit Swap, or Spooky Swap, versus Taro, which is getting, let's call it 9%, at a $15 million market cap. You see Spooky Swap at 26% for $200 million. Well, it's basically, you could just call it 18 times the market cap, or 18 times the size. So being 18 times the size, the share is only 3 times more. So with Taro, you can get exponentially more emissions because the market cap is a lot less, because the market cap to share ratio of the NFT is way higher for Taro, because, well, you're going to be getting more of the emissions because more emissions are going to the Taro pool because there's a $15 million market cap, like ratio wise for market caps. Sure, I understand more tokens are going to Spooky Swap, but it also has a higher market cap. So it's harder to get a larger share of Spooky Swap. So if a protocol wanted to get all 9% of these, they would have to just shell out, well, obviously it wouldn't be $15 million because as you buy more, it keeps going up. But theoretically, if you could buy $15 million worth of Taro, like the whole entire market cap, you would get 9%. Whereas in order to get 26% of Spooky Swap, you got to buy $200 million. It's going to be more than that, but I'm just helping you guys understand the ratios. So I hope that helps a bit. Again, like I was mentioning to you, this thread also says it as well. Said another way, think of token purchases like Taro, Scream, Spooky Swap to join LP pools as indirect purchases of solid, with magnified buying power the earlier you join the farm. And so they're explaining that the longer you wait, the higher the farming token prices be, increasing the cost of solid. So it's almost like, oh, get in early and it should do better. but get in later, it's not going to do as well as getting in early. This is just what they're claiming. I'm not telling anyone to do anything. I'm explaining this thread to you guys so you guys can understand the game theory and the concepts behind this. So again, this is not financial advice. I'm not telling anyone to jump into this. I'm just trying to help you guys understand this. So one important point to understand from all of this is don't think of solid emissions as a new incentive program for the Fantom ecosystem. Think of solid emissions as like a new incentive program for the Fantom ecosystem. The reason being is in order for protocols to partake into this and have fun in the game, it'll vacuum the capital from other farms because people are also wanting to participate. And when more capital comes in, there's more value there. So more, more money keeps coming in. So it's really like a massive flywheel. I don't know. It's going to be a crazy experiment. And what's interesting is most of this is paired to the Solid token. So this is all depending on the Solid token itself. So in my opinion, if the Solid token itself crashes, then that could crash the whole entire flywheel effect. But you have the game theory and synergies involved to prop it up. So again, this is going to be a massive experiment. There are risks involved, so don't just be like, oh yeah, there's no risk involved, whatever, I just buy it and it'll be, no. There are risks involved. So just make sure you understand what you're getting into before getting into something like this. So now a couple thoughts I do have. In general, like some people are like, oh, well, this gets rid of the Beats prize on Beethoven Finance. In my opinion, I don't think so. I look at Beethoven Finance mainly for the smaller protocols. So like this is going to be protocols that don't have the VE NFT, whereas so serving the long tail assets. Whereas Solidly and Solidex, those are going to be serving the larger cap assets, like the top 20, top 25 market cap coins on Fantom. There are a ton of protocols that need liquidity, and in my opinion, Beethoven Finance would be good for that. And people can still play in the bribe game with smaller amounts of money. That's like saying Curve is the only player in the game. No, that's not the case at all. In fact, Curve is really, really good, but it's more so, it does take some of the long tail assets, but it's more so for the short tail assets, like the larger market cap coins. You wouldn't go on there and see some of these like Pancake Farm or like briefcase Farm or Thugs Finance. I don't know, just some like random names, whatever. That's what I see something like Beethoven Finance for. Comparatively, you can look at Solidly and Solidex, in my opinion, as the short tail assets. So they have their little flywheel effect going for the long tail. It does have a lot of value in it. And then you can look at Beethoven Finance for the long tail assets, like the smaller cap ones, and still participating in the bribes. And yet still also having the other protocols involved as well. So it still has larger caps like your Liquid Driver or Spirit Swap or Spooky Swap or even Solidex. They even have their own pool over there. So anyways, guys, I hope you guys enjoyed this video. I hope this broke down a couple of things on the Solidex and Solidly so you guys can understand the synergies involved. In fact, Solidex is going to be like your farming protocol, and Solidly is basically the swapper that's built in on there. Fees are super, super, super low, and the liquidity is actually really, really good. So the experiment is actually playing out really well at the time of this recording. So time will tell. We'll see what happens in general. So I hope you guys enjoyed this video. If you guys did enjoy the video, if you want, you can smash up the like, subscribe to the channel. And if you guys want to join the Discord, there's a link in the description below. And in Discord, I talk about things like these and different farms I'm in. Basically how I'm playing on the markets. Yes, this video did air sooner in the Discord, but links in the description below if you guys want to jump into that. And shout out to Camilas for making this great thread, and also to Deez. He is in the Telegram and the Discord. This guy actually was like, hey, this is a great thread. You should take a look at this. I took a look at it. Open up my brain, open up my mind, and I really appreciate him for that. And thank you for the share. And also, again, Camilas, thank you for the great thread. Let's go ahead and leave you guys with a wisdom one-liner. From Proverbs chapter 18, verses 2. Fools find no pleasure in understanding, but delight in airing their own opinions. This is actually really true. This is interesting. This actually happened today. This happens a lot in general. So, fools find no pleasure in understanding, but delight in airing their own opinions. So, I've done this before as well. A lot of people make their own opinions and just say, yeah, this is this, this, and this, without really taking into consideration other things that could potentially happen, or other existential factors into that. They just feel, okay, they're right, so I'm going to do any and everything I can to be able to say, yeah, this is right, this is right. And even when there are other defenses to show that you're wrong, they still believe they are right. Let me give you an example of this. Let's just say, for example, someone is doing an autopsy on why someone died, and they already automatically factor out, like, this person did not die by water, like they did not drown. So what they do is they try to find any evidences or look for any and everything that proves that this person died by this certain scenario, and just like not even factoring it, they could have died by water, when in this fact, or in this case, they actually did die by water, but they're just saying that they didn't. So what would happen is they would take all these tests and say, oh, this, and this actually points to this person dying by this. Whereas this, and this, yes, it did match up to this person dying, but there was also other factors in addition to those that pointed that, oh no, they actually died by water. But they don't factor that in because they're like, oh no, they didn't die by water. I know it's kind of confusing, but I think you guys get the point. Once someone has their own opinion and they don't want to believe something else, they will create a case to make it to where they're right, or they won't listen to understanding or what else is potentially right. Anyways, thanks for tuning in, guys. I hope you guys enjoyed the video, and if you guys are on Discord, I'll leave a breakdown on how I'm playing the solidly, what I'm doing, and some other strategies you guys can use. Thanks for tuning in. You guys can also catch me on tweeters at rent a home fast, like literally at rent a home fast.